Talking markets, Jameel Ahmad is the Global Chief Market Analyst and Vice President of Corporate Development at FXTM, joins us on the line. Jameel, good to have you back on.
Thank you very much for having me.
So let's kick off with the local story. Markets here in the UAE and around the region. What's been happening?
There's still a lot of volatility when it comes to the emerging markets right now, mainly because of the volatility in the oil markets, and there's uncertainty over the longer-term oil prices. But to be honest, I still think the UAE markets, they're less exposed to the emerging market risks, mainly because there is not so much currency exposure. Now, what I mean by this is a real advantage for a currency that's pegged to the dollar, because if you look at the Indonesian markets, the Malaysian markets, they're falling in line with equities.
Jameel, you're based in Cyprus, of course. You're in London at the moment. Let's move to the international story. What are you closely following? What are you looking at in particular at the moment?
What I'm really looking at right now is that the China GDP is scheduled for release next week, and we see this as a very high-risk event for the markets, mainly because this could actually be the quarter where the China economy, it falls below its government targets.
And when it comes to the Chinese releasing figures, there is, of course, that knock-on effect for confidence globally. We've seen that recently, and I guess in many ways, more and more observers are more and more pessimistic.
Yeah, well, look, there's deep concerns that the China economy is going to enter a far deeper economic downturn that was previously anticipated. Now, this can have a knock-on effect on the commodity markets, but more specifically, those economies that are so reliant on exports to China. Because to be honest with you, the China economy, it can handle softer economic growth. I mean, its growth levels, even if they come in at 6.5% next week, they're phenomenal. But if you look at the recent data from China, you're seeing that their trade data that was released yesterday morning, there's an imports at minus 20%. Now, this already suggests that China economy is importing far less for overseas. Now, this is where it's going to have a knock-on impact on other economies.
Let's quickly finish off with a look at currencies today. Where's the money, Jameel?
Yeah, well, look, the U.S. Federal Reserve interest rate expectations, they're continually being pushed back. So what we're seeing is a real bounce in the euro and increased appetite towards gold. Now, gold has rallied by over $70 over the past week. Now, in regards to the UAE dirham, due to the pushback U.S. interest rate expectations, we're also seeing the dirham slipping lower against the euro and the Japanese yen. Now, there's an event risk to look out for with the China GDP next week, because if it does awake some market concerns, there's likely to be increased appetite towards the Japanese yen in the short term. So over the next week, I will be taking a close look at the dirham yen.
We'll be back talking to you next Wednesday. Jameel Ahmad is the Global Chief Market Analyst. He's the Vice President of Corporate Development at FXTM. Jameel, good to talk to you. Thank you.
Thank you very much for having me.
Have yours.